There was some emotional selling pressure in the stock market last week. I'm going to show you how to profit from that. Plus, I'll do my market analysis. We'll figure out if there is more weakness to come. We'll look at the day trade of the week on DMYI and run a market scan in search of opportunity. So how do you profit from emotion? When there's strong selling pressure, it creates fear, it creates panic, and it causes people to accept prices that are too low, and that creates an opportunity. The question is, how do you know when prices are too low? How do you know when price is going to snap back and move higher? Well, it's actually quite simple. If you can understand the concept of a parabolic trend line, as opposed to a linear trend line, then you can see the opportunity that comes from emotion. Now we're going to look at a chart in a moment and I'll show you exactly how to do it. Fear leads to panic, we understand that, and that leads to opportunity. When prices are pushed down far below the linear downward trend line, there's a buying opportunity. So what we want to do is look for this parabolic downward trend and buy when really it feels hard to do so because the market feels like the sky is falling. Now, what happens is that price likely comes back up to that downward trend line, and at that point, it's time to sell. So here's a chart of the S&P 500. This is a 30-day, 30-minute chart. Now, let's just review how we draw trend lines. Just draw a line across the bottoms, draw a line across the tops. That's simple. In fact, let me redo that on the tops here. Just draw a line across those tops. There's your linear trend line. You can see I'm just touching it off of what I call inflection points. If price falls away from the trend, it should come back to the trend. Well, what we saw on Monday this week is we fell far below the trend. We had some strong selling pressure on Friday, and that culminated with a big gap down and a panic selling on Monday. And then look what happened. The market came back. So how do we know when to buy? Well, first of all, you have to have that parabolic move. Okay, you can see that the trend line goes from linear to a curve, parabolic. That shows emotion. Now, emotion can last many days. We don't know when it's going to end. So we need to wait for a break of the parabolic trend line. And that happened right there. Now, there's another signal right here. I call that a dead cat bounce signal. When the market hits a new low and then snaps back to close above its open on that particular candle, that's a dead cat bounce. So you're parabolic, you hit a new low, and you close as a green candle on that 30-minute bar. That is another signal. But the more reliable one was this break of the parabolic trend line. So you be a buyer of stocks then, and look at what happens. You get a nice snapback right up to the linear downward trend line where the market has stalled, as you would expect. So buy here, or buy stocks in general here, and start selling them here. Take that quick profit on a short-term trade. All right, well, let's get into this week's market analysis, starting off with the US markets. And of course, last week we had some concern that a correction may come because we were flirting with that upward trend line on the long-term chart. And you can see here, this is the same chart I was just looking at, but we broke down, started the week with a lot of weakness, but the good news is the market has come right back up to close inside the upward trend line on the weekly chart. So if we sort of draw a line like this, you can see that we went below during the week and we've come back above it. I don't think the market is out of the woods yet. Last week I talked about how trend reversals usually come after the formation of a falling top. And this week we didn't have a falling top. We were coming off of the highs. If we rally up a little bit, say this week, and make a falling top, and then flirt and break that upward trend line from a falling top, well, then that's going to be a signal that the market's likely to go lower. That hasn't happened yet. We may simply bounce off of this and continue the upward trend, but that's what I want everyone to watch for in the weeks ahead. And of course, I'll do that here as well. On the NASDAQ 100, it has also held its long-term upward trend line, and it's actually quite far above it. And it has horizontal support there, which it's held. So a little bit of weakness in the month of September. Month of September, historically the worst month of the year for the market, and it's done that again this year. On the Russell 2000, it hasn't made the gains that the large cap indexes have made, and therefore it doesn't have as far to fall. You can see that the small cap index is stuck in a sideways range. It picked up a little bit of gains late this week. Relatively boring market, but there are always individual stocks that are able to do well because the market isn't hurting it. The market is not helping the small cap stocks, but it's not really hurting it either because we're stuck in that sideways range. All right, on to the Canadian markets, and here you have a chart of the TSX, and same sort of story. There's your linear trend line. You went far below it, you broke it, and prices bounced back quite nicely. On the long-term chart, just like the S&P, that long-term trend remains intact. Looking at the TSX Venture, you're building falling tops on the TSX Venture here, and that is a sign of pessimism. And so if we break this support zone from pessimism, then this could go lower. And it's looking like that's quite possible as we are flirting with that. We may be saved by seasonality because, of course, seasonality is on our side starting in October, and we'll see if we can break that downward cycle of falling tops. On to currencies, US dollar continues to hold well and build optimism. How do we know we're building optimism? Because we've switched from falling tops to rising bottoms. And so now we just need to break that resistance. We tried to do it about 6 weeks ago, kind of fell back, but we're testing it again. And I think there's a good chance the US dollar is going to break through that resistance zone. Bitcoin is stuck at the resistance formed by the downward trend line. We talked about that in recent weeks. It's such a reliable indicator. When prices fall away from the trend, come back up, they usually get stuck and go back lower again. If we can break the downward trend line from a rising bottom, well, that's a good signal for Bitcoin, but it hasn't happened yet. On Ethereum, also falling back from resistance, generally something to avoid for now. On to commodities, and there we see the gold chart. It's building falling tops. That is a sign of pessimism. It has support right here, but if it breaks down through that support zone from these falling tops, then I think next stop is down there, which would be a fairly substantial move lower for gold. Hasn't happened yet, but that's what I want you to watch for. Oil, it has broken through some resistance. You can see that oil has been stalling underneath this price ceiling for 1, 2, 3.5 months, and it's starting to break through. No real volume behind it yet, but the oil market is looking better after consolidating some of the big gains. You know, of course, this run here was a pretty big gain for oil, and it just built a nice little base. And let's see now if it can break up through that and start to recover even more. And finally, the fear chart. We had a little spike in fear to start the week, but ultimately have fallen back, and there's really no fear in the market. So my ratings then, I've raised them on US and Canadian stocks to bullish long term. We were able to hold support at the upward trend line. I'm still going neutral short term because there is still some uncertainty. Gold, neutral long term and bearish short term. And oil, now bullish on both time frames. There was some selling this week. That's what we started our week with, and that took stocks down below the upward trend line of support on the daily chart. But the buyers stepped in, they defended the market to finish the week with the upward trend intact. Now, I think caution is still warranted, but we are coming into the strong season for stocks and therefore have some optimism that we will start to recover after September. Gold is weakening, oil is strengthening, and fear is low. All right, let's take a look at the day trade of the week. And this week, we've got a really nice stock because it triggered a number of my day trading strategies, 3 in fact. The first one was the day trader strategy. Now, the day trader strategy utilizes my action candle indicator, which is my own indicator. It's available to active trader members of Stockscores. And we found that stock early in the day, I think shortly after the open, maybe 10:10 or so. I don't remember the exact time, but right there, you can see that there's a spike of volume, a spike of price. And you know, if you were watching this stock at that moment, you would say, oh, something's going on. The problem is, how do you know to watch it? Well, that's where computerized algorithms come in. We can use the computer to find these things instantly in real time. And that's what we're doing in the active live service on Stockscores. So that was the first signal, picked it up, and it had a nice little run, made a pullback. This is called a flag or a pullback play. And we have our second signal right there on the break of the pullback for another run higher. We then get another pullback play right here on the break of this downward trend line from a rising bottom. And then finally, there was what we call a superhero trade signal later in the day right there on the break of a pennant. That one ran out of racetrack a little bit because it was near the end of the day, but it still managed a little bit of a gain. So if we just use the first entry, the position size for $100 of risk would be 900 shares. If you wanted to take $200 of risk, you buy 1,800 shares. Capital required, $9,117, but because this is a higher price stock, you can margin that 3 to 1. So actual capital required is a little over $3,000. At the end of the day, it was up 10.6 times its risk, which meant a $1,060 gain for every $3,039 of capital put to work. That's a 34.8% return on a one-day hold, and that is pretty awesome. Well, let's get into the Stockscores market scan now and run the abnormal breaks market scan on the US market. And this is how I find position trades in stocks that are behaving abnormally. So we'll just jump over to the market scan. Of course, members of Stockscores can run the abnormal breaks US. You have to be an investor member or higher and run that market scan. Found 21 stocks. Now we're going to just zip through these charts and look for those that are making abnormal activity from a predictive chart pattern. So if we start with this first, this is actually a warrant, but this is a stock that was behaving abnormally on Thursday and Friday. We actually started day trading this stock on Thursday, and many of the active trader members held this into Friday and had really nice gains on Friday. The problem is the longer term chart, beyond the realm of a day or swing trader, is not that great because you're going to see resistance right there. You're fighting a lot of pessimism. So really this was a stock that was worth trading only in the very short term. Same thing here, SRTS, breaking up into lots of pessimism. A good day trade candidate perhaps, although it didn't have great liquidity, so maybe not. But sometimes a stock will trade abnormally, but it doesn't really have the longer term chart to justify a longer term trade. Now this one, LOGC, is a little better. You can see the downward trend has been broken. We've built a rising bottom, and on Friday we broke from that rising bottom with some abnormal price action. Volume was good, but not great. I wish the volume had been a little higher. I wish there wasn't this, pessimism through the month of September. So I would give this a 6 out of 10, which means I think it has a 60% chance of going higher. MTEM, too much pessimism on that chart. Same with BWAY. Here's the GOEV. We looked at the warrants earlier. Same situation though, breaking up into a lot of pessimism. This is not too bad. MAAC. It's breaking from low volatility. However, there is no volume. And the nature of this pattern makes me a little suspicious that there may be some sort of acquisition or something going on that's put that stock into a very narrow trading range. Nothing on NFH. Let's go on to the next page. So you're noticing, hopefully, that I'm just zipping through charts looking for breaks from abnormal activity from a predictive pattern. We had that on AEHR back here when you see that spike of volume breaking from low volatility, and that put that stock into a nice parabolic trend. It is now way too late. We're still day trading the stock. It presents lots of good opportunities. But the position trade entry was back here in July when it first started to surprise the market with abnormal activity. VRS, too late. SBGI, too much resistance. CHUY, going to find resistance in all of that pessimism from the downward trend. BJRI, not great. PRGS, this is a nice pattern. This is called an ascending triangle. All right, and you're breaking out of that, so that's good. The only issue is perhaps reward for risk. So I like to take a look at a 3-year weekly chart just to get some context. And here I can see that it's really a nice break to new highs. I think it's quite good. The issue is this move this week is as big as the move that the stock did over, say, 2 months. What that means is that for this to start to make bigger gains, it's going to be really hard because the move this week was so massive. And so the reward for risk trade-off isn't great. So in this case, what I like to do is hope that maybe the stock can pull back a little bit and then start to move up. That puts the stock closer to support, making the reward for risk trade-off better. Now, these are concepts that I teach in the Stockscores Trader Training, which you can learn more about at stockscores.com. Got a couple more charts to go through here. We're into our last two. Costco, here's the kind of pattern we're looking for. See how this stock was going sideways and then it breaks out. The stock scores have been above 60 for many months. That's good, but to chase it here, I think it's just a little too late. Still a good hold, but too late for me to want to enter that. All right, well, that has been the Stockscores Market Minutes. We've done a market scan, looked at a day trade of the week, talked a little bit about how to take advantage of emotion. If you liked all of that or any of that, please click the like button, subscribe to the channel, tell your friends, tell your enemies, most importantly, trade well.